and we are very lucky. We've got John Petrides. He is a portfolio manager at Toqueville Asset Management. John, it's so great to see you. Look at you. You are Walden territory there. I love it. So happy to see that you are healthy and safe and in a lovely, lovely place. The last time we chatted, it was Disney CEO Bob Iger leaving, and we had a ton going on. So a kind of a calmer kind of situation. But look, 3 straight days here now of these gains. What does sustainability look like? I mean, what needs to happen to keep this going, given that it's very unclear right now the progress of slowing the spread, every state and country doing something differently here at this point?
Yeah, well, thanks for having me on. And obviously, my best to you guys and your family and the Cheddar family and everyone listening. I hope everyone is healthy and safe, obviously. I was surprised that the market rallied the way that it did today, given the jobless claims. I mean, the number was so huge of 3.6 million, and consensus was around 1.4, 1.2 million. And the fact that we rallied off of that is just amazing. Goes to show you how the market is a future discounting mechanism of future cash flows, and the economic data that come in as a bit lagging. So clearly, the market is satisfied with the stimulus, the fiscal stimulus that's come in enough to handle and to support the layoffs. Because I can't believe that we rallied as much as we did today.
That's very true. And I wonder if you believe it's because investors are listening to what Treasury Secretary Steve Mnuchin said earlier, saying that this is just temporary. We're going to get it all back. Do you think that really outweighed, right? I mean, that kind of sentiment outweighed this historic jobless claim number from last week?
Yeah, I think clearly that helped. There are three legs to the stool here that we need, at least from a market standpoint, to get the whole thing back on track, and we have two of them. The first is on a monetary policy. I mean, the Federal Reserve is throwing the kitchen sink to make sure that there's stability in the financial markets. And what they announced on Monday was just unbelievable, that the Fed is basically going to be a garbage dumpster and will buy basically any investment grade credit, support the market in order to keep prices stable, right? So we have monetary policy where, interest rates and the amount of money printing going on is heroic. So we don't have a 2008-like event, Lehman Brothers-like event, okay? So that's number one. Here, the fiscal policy, clearly Congress has learned from, fighting back and forth from the floor of 2008 in passing TARP. A $2 billion stimulus is 10% of GDP. That is an enormous number. And the fiscal stimulus builds a bridge, right, from now until we find some sort of appropriate treatment and vaccine. Now, the last leg of the stool we need are the treatments and the vaccine, so that people feel comfortable again, and we could ease the social distancing that's going on, and we have some cure, some ramification to offset this for now and in the future. So when flu season comes around and when the winters comes around again, we're not shutting down the economy on an annualized basis. We're doing this. We have a solution to it. So that's sort of the last leg of the stool. I'm sorry to answer your one question that you asked me originally was, what do we need now? The market is in a bit of a black hole. And what I mean by that is the final 2 weeks of the third quarter, of the third month of every quarter. So you figure March 16th to March 31st. And in the first 2 weeks of the next quarter, the first month of the next quarter, you figure April 1st to April 14th, there are no earnings coming out. So when you highlighted Nike, we have Lululemon coming out. The market is being pushed around by headlines because it can't wrap any data around what companies are going to do with future cash flows. So I call it this black hole because it's really the headlines pushing things around. And that's really, so we really need earnings season to come in so investors can then, figure out what the future holds for each individual business.
Right. I know that denominator, that E, is like a big question mark at this point. We can't do that. That comes out to be an irrational number going forward. So, talking about unprecedented events here, I mean, you had the Fed chair going on the Today Show, okay? The Today Show, talking to Savannah Guthrie about this, saying there may well be a recession here, but there could be some other measures, especially if the economy is going to be reopened soon. I mean, what did you make of the fact that the Fed went on the Today Show to talk about this?
Yeah, unprecedented, really interesting. I mean, to go back, it was only, you go back in 1994, and the Fed never even had a press conference. They would just issue a press release. They would issue it quarterly. And now you have the Fed going on a Today Show 26 years later. It really is just shows you where, from a communication standpoint, the Fed has come. It's really amazing. And I guess it was necessary. I guess he felt it necessary to. And you have an all-hand-deck approach here from whether it's Dr. Fauci or Steve Mnuchin or Jay Powell, trying to ease people's fears and show that those driving the ship are have a plan, and we're going to be united on a united front to get through this together. It really is unprecedented.
Yeah, absolutely. Just to go back to the stimulus bill, I mean, some people actually take issue with the word stimulus because it actually is trying to plug in the whole. You mentioned this, of course, being in context of our GDP, 10%. Some people actually think it's not enough, that we actually need to infuse more. And specifically also because some of these checks, they're going to be sent to people within the next 3 weeks, right? So what happens between now and the next 3 weeks before this money actually starts getting recycled back into the economy?
Yeah, I mean, clearly, logistically, let's see how this all gets in play. Thankfully, we're in a time where there's access to a lot of data, and you don't have to mail a physical check. You could do direct deposit for those that have the capability. So, this will be a real test in terms of logistics of how to move the money. In terms of the size of and scope of the fiscal stimulus, I mean, the only way that this is not enough, I think, in my opinion, is if social distancing goes on for an extended period of time. If a year from now, I'm not on the floor of the exchange with you guys doing an interview, and we're
Right.
doing it via Skype like this because we can't, we have to be a distance away from each other, then clearly 10% of GDP is not going to be enough, and we're going to need more money. So the whole idea behind this is to build a bridge
Yeah.
from now until when we buy those pharma companies and those healthcare institutions that are getting treatments and vaccine in place.
Absolutely. John, please stay with us. We love having you on, but we do have some breaking news now coming out of Lululemon. The earnings are out, and our own Brad Smith standing by with the numbers. Brad.
Hey, thanks so much, Hope. Yeah, we're tracking Lululemon shares, ticker symbol LULU. Shares are actually moving a little bit lower here in after hours trading in reaction to the earnings report encompassing November, December, and January, and flowing just into the first 2 days of February of this year, where ultimately they did beat on the expectations. EPS coming in at $2.28 a share, above the $2.24 marker that was expected by the street, and then revenue. The estimate there was $1.38 billion. They came in at $1.4 billion. And so taking a look at shares and where they closed here on the day, sure, they closed higher during the actual session by about 3.7%. Of course, rising tide that we were seeing on the day. So you didn't really see too many laggards across the broad scope of the equities market. But Lululemon, what's critical to note about this is that this is similar to the story that we've seen from other retail brands, in that they have had these store closures. They are not providing their own guidance for this upcoming quarter, and really lifting the guidance is a consistent theme that we've seen. They made the announcement to temporarily close all of their retail locations in North America, Europe, Malaysia, and New Zealand. They announced that in March of this year. I actually got that email as I've shopped there a few times, and they sent this out to their customers, letting them know that the Lululemon stores would be closed starting on March 16th and through March 27th. The critical thing to watch is if they have to expand that timeline as these social distancing measures and restrictions on the number of people that can be gathered in one place, and retail companies doing their part to curb the spread of the coronavirus. If they have to extend that time frame, where that may actually impact some of their forward earnings and revenue on the store side. But ultimately, right now, a good holiday quarter is what they are reporting. And so as we're taking a look at Lululemon shares, they are moving just a little bit lower in after hours trading. We'll see what they say going forward from here and the updates. This was a quarter that also encompassed a change at the COO level. So we'll see if there are any more announcements that the company puts out with regards to that. But ultimately, right now, shares of Lululemon moving just a little bit lower in after hours trading on a beat on top and bottom line for the company's most recent earnings report. Hope, I'll toss things back over to you.
All right. Yeah, great stuff there, Brad Smith, breaking those numbers down. John, if you're still with us, I mean, all things considered, right? Again, 3 days now of this rally that we're seeing. We are technically speaking, just technically speaking, outside of the bear market territory now for the Dow. What do you make of Lululemon's results?
Well, a couple of things. Lulu has actually outperformed relative to the market. So the stock was down about 15% year to date, with the market down about 20%. And listen, in a world of retail disintermediation, Lulu is one of the few publicly traded retail companies that actually has brand power. I would assume, without seeing the numbers, if they missed on the top line but beat on the bottom line, if you broke down their international versus domestic sales, I bet you their international was off because of China basically being offline during the quarter. And maybe the U.S.'s higher margin, which is what helped on the earnings side a bit. You can't really fault their management team by cutting by removing full end guidance. I mean, if I was a CFO of a company, I wouldn't stick my neck out there either and try to figure out where the results are going to be. I mean, it's like trying to putt a golf ball, but the hole keeps moving, given the uncertainty and variabilities going on right now. So that is clearly a trend that we're going to continue to see companies report in the out year in the upcoming weeks.
Yeah, just really quickly, you're seeing comparable store sales still up about 9%, and direct consumer net revenue also up 41. I mean, this is a pretty healthy business.
Yeah, I mean, again, there aren't many. The retail market is so disintermediated right now, and there just aren't that many publicly traded brands where people will actually go to the mall and not have to do direct to consumer to buy their brand. And Lulu is one of the few great brand companies still standing.
Yeah, that's right. Even if you can't go out to the gym and show off your Lulu, you can, do your Instagram fit videos and stuff too. So I guess
Right.
it makes sense, no matter where we're going, as well. John Petrides, thank you as always for being with us, and especially during a time like this. Please stay safe.